Hello, investors and traders, and welcome to the weekly market report. Before we get into the charts, as promised, I said I would offer some educational content on this Friday, January 31st, and I said that we would be talking about volume. If you've been following along, you'll know that I have a 7-point trading checklist that basically analyzes the signals from the technical charts. We look at the type of candle, obviously, if it's bullish or bearish, and then we'll mark the checklist accordingly. We then look at volume because volume is a leading indicator. A lot of people believe it's a lagging indicator. I would most definitely disagree with that, and I'll show you why in a moment. If you're looking at a stock, you have to understand that the force behind the move is driven by volume. It's not driven by more buyers than sellers causing the stock to go up or more sellers than buyers pushing the price down. It could be one person with a huge amount of volume buying a stock and it'll go up. And the same thing would be on the downside. And I often use the kite analogy to describe how volume works when analyzing the charts. Hopefully you had a chance when you were a kid to fly a kite. If not, I would encourage you to do so. It's a lot of fun. Take care. Kids, grandkids, nieces, nephews, family, whatever it may be, grab a picnic basket and go fly a kite. Well, here is the example of how that works. The kite represents the stock. And what causes the kite to go up? Well, the kite goes up when wind comes from beneath the kite, right? So the wind represents the volume of the stock. And so when you're comparing the price of the stock to the volume, you can see down here in the bottom left, we have a series of candles that are going up with higher lows and higher highs. And the candles start to reach a point where, although this is a green candle here, notice down below we have a pretty dramatic drop in that volume. Remember, the volume is the force behind the move. So if the buyers are controlling the stock, and we say down here, this is the kite moving up, right? We got the kite with the tail here. It's going in an upward direction, and the volume is coming under the kite to make it go higher. Well, as soon as the volume drops, the force behind the move is now weakening. And that is usually the telltale sign that's giving us the clue that prices could very well drop. And then, of course, we look at the type of candle, the formation of the candle. You can see here we have a higher high followed by a lower low, and that's a half signal. And then what happens is we get the full pivot the very next day here. And then the stock continues to drop. You see, so it happens on the way down as well. If the volume is increasing on the way down, it's telling us the force behind the move is being controlled by the sellers, and the sellers are becoming more motivated. However, once the volume starts dropping, then it's telling us the sellers are losing momentum, and that gives the buyers the signal to start buying. They start to step in to test the waters there. So that is what we're looking at right now. Now, the markets are still open, and I'd like to go over some economic news and then close with the price targets for next week. Remember, today is the last trading day of the month of January, and Monday will start the very first trading day in February. So it's going to be a very interesting month because we do have a shortened month to begin with. And again, I think it's going to be very, very interesting. Now, if you look at some of the data that's out there, this I find most interesting is that corporate insiders are starting to dump their shares, and they're doing so in a record pace. This is the Washington service as of January 22nd. So we're talking 9 days ago this was released, and there's no secret. We've been seeing this all along because this is public information. You can go to a company report, whether it be through Yahoo Finance or any other service you might subscribe to, and it'll give you the activity of the insiders and what they're doing. Another little bit of information here is that U.S. consumers have fallen behind on their debt. And this is showing active credit card accounts and how many are just making the minimum payment. And if you have ever taken out a larger balance on your credit card, you know that if you're only making the minimum payment, you're never going to pay off the debt. They're just going to keep you floating for as long as possible. And as interest rates continue to climb, the cost of those minimum payments continue to go up. So this is obviously not a good thing as far as a leading indicator for the economy. And I've been talking about personal debt and credit card debt and even corporate debt for a good long time. Here we have a leading indicator for the economy, and that's annual existing home sales. This comes from the National Association of Realtors. And you can see here, we haven't seen this level since the 90s. And so we're seeing a dramatic drop in home sales. Now, this is nationally, of course. You have some parts of the country where supply is limited. That would be more of a seller's market, while when you come down to areas like Florida, you're going to have much larger inventories. And what I'm seeing, because of this, I guess you'd say, differential in the supply from the north to the south, is you got a lot of folks selling at premium prices up north and finding bargains down in the south in states like Florida and Texas, where here in Florida, you don't have that state tax to worry about. So people are coming down and getting a good price on their houses and getting a pay raise for those that are still in the workforce. So it's very interesting, but it is something that would be considered recessionary. Now, this came out through Global Markets Investor. The private sector employment is in a recession. U.S. private sector full-time jobs have dropped by nearly 2 million over the past year. And as you can see, such a drop has never happened outside of recessions. So as I mentioned before, now that Donald Trump is in the White House, I think the real numbers are going to start coming out, and the real reporting is going to start showing the state of the economy in full force. And I do believe we're going to start seeing more reports coming out using the R word, recession, right? Now, if you've been paying attention to what's happening in gold and silver, pay more attention to what's happening in London. It's hard to ignore the headlines. And we're seeing a possible shortage and maybe even a default in London as supplies have been depleted. Now, I was a member of the Commodity Exchange for 10 years. I was the Option Floor Trading Committee chairman. And so I would see what was happening inside the exchange, within the membership, and even outside. So you have to keep an eye on the physical supply, because if the lease agreements that are out there by many of these major banks start to get in the way, we could see a possible short squeeze like never before. Last Monday, I put an article out through Zero Hedge. I'll put a link to that article so you could read what I wrote about with regard to the cup and handle in silver. My forecast in silver is that we will go up to 50. Once we break out of 50, we could easily run to $95 to $100. And my forecast on gold is still set and in place at $3,000 an ounce. We're getting closer and closer to that on the gold target, and I'm very, very happy to say that our price target is still hitting at over 82%. Now, let's take a look at the market. Again, we're in the final minutes of trading here. This is DIA, and as you can see, we have a full-fledged bearish engulfing candle right there, as the wide divergence is staring us right in the face. That's a price divergence from that moving average that we haven't seen in a while, and it's wider than what we've seen in the past, even back here. And you can see in December we had a wide divergence that ultimately pulled back to that moving average. Do I think it could do that? Yes, and I think we could even go beyond that, because there's still a gap below the market that I believe one day will fill, and that one day could come sooner than later. So my downside target on DIA is still in place down there at 425.51. Downside target 425.51 for DIA. Looking at IWM, my downside target still in place. You can see again another bearish engulfing candle. Oscillators are pivoting lower. CCI is pivoting lower. We got the increase in volume now on the way down with that red candle. That's telling us, remember what I just said, when the volume is increasing on the way down, the sellers are motivated. So if you see higher volume on the way down, that should get you thinking about the possible buy order you're getting ready to put in the market. I tend to stay away from those buy orders when the volume is increasing on the way down. So my downside target is 220.23. We still have an open gap down here on IWM. Once this CCI down here crosses below that black line, which happens to be the momentum line, then you will see generally 2 to 4 more days of downside movement in the direction of that cross. And you can see back here, that's exactly what happened. We crossed below the momentum line, and what happened? 4 days to the downside before it bounced. Look what happened back here. We had that cross, then we had 4 days, and then a continued move lower. And so that is something that is very reliable. And keep in mind, for the bulls out there, or at least the short-term buyers, that happens on the way up as well. You know, when prices cross over that momentum line like we see here, 1, 2, 3, 4, hit the high right there, and then started pivoting lower after that. Remember, 2 to 4 days is the average. It's not a guarantee. It's just what we normally see. You see back here, same thing. Cross to the upside, 1, 2, 3, 4, and then it started pulling back. These are little tidbits, or I guess you could say golden nuggets of education. And one of the reasons why I tell people you cannot lose subscribing to this channel. You will not waste your time. You're always going to get something that you could benefit from. And then once you learn it, go teach it. Teach it to people you care about most, especially your kids, grandkids, nieces, nephews, family members, whatever. Go teach it, because they don't teach this in the schools, for sure. Looking at QQQ, here we have the tech sector. It filled that gap like a champ. Look at that. Now, 80% of the time, gaps fill, and then after those gaps fill, we tend to get reversals after the gap fill point. So that's exactly what I think we're going to see happen next week. I'm telling everyone that while this target is already hit, I'm going to go out and extend that target. I think we're going to revisit that downside target right down there at 510.16. So I'm leaving that in place. I'll change that to a dotted line later. Look down below. The stochastic is starting to pivot, not hinge. It's pivoting back down. We have a CCI. It's still going up, but I'll tell you right now, Monday, I can always give you a guarantee that that's going to pivot lower and start to cross below that zero line or that momentum line early next week. So that's Qs. Next is SPY, and then we'll get to the VIX, and I will talk about silver. SPY, bearish engulfing, filled the gap again like a champ, and now I believe we're going to start pivoting lower. I have my downside target in place. That downside target right there is 590.63. You have to keep in mind, folks, these are my downside targets. I never, ever give guarantees of time frame on that. However, I will often talk about those time frames or possible time frames with our option traders who are members of Sticky Trade. By the way, if you want to try 15 days for free trial, we have a lot of folks coming on. Shout out in the comment box if you're one of those trial members and enjoying the ride so far. And please let everyone know we don't pressure anyone. We don't take credit cards. We don't do all that crazy stuff and sales gimmicks. We just let people come on board, watch what's going on. We hit some home runs this week. Go back and look what happened on the midweek report. We're knocking them out of the park. And it's been a great, great trading week. And I believe it's going to even get better in February. But what I'm getting at here is that when I put a price target on that, you can see that all these diagonal lines in the past are previous targets. Sometimes they hit right away, like we saw back here. Sometimes it takes a while. Right? Upside target hit, downside target hit, up hit, down hit on the first day. This one hit. And I think this will eventually hit. And so if you're an option trader, what you're doing is you're putting on bearish spreads, taking advantage of an opportunity to the downside. That's how we trade. We're not day traders. We're not investors. We're swing traders who use option spreads in a very conservative way. So again, downside target is 590.63. Let's talk about the VIX. This is very interesting because again, on Wednesday, I said, well, I cannot give you a guarantee that this gap down here will fill. I can tell you that if it does fill, we're going to be on the launch pad. And look what happened today, folks. That gap filled perfectly. And after that gap filled today, early on during the day, what do we have showing up right now? That is a bullish engulfing candle. And so the VIX is on the launch pad like a SpaceX rocket getting ready to lift off. And so my upside target on this one is quite extreme, but I do believe it will hit. That upside target right there on the VIX is $27. It's currently trading under 17 right now. There are ways to trade the VIX. Keep that in mind. There are instruments that you could do that, and you could even trade options. And so investigate that if you've never done so. And always remember that while for the most part the VIX is inversely related to the S&P, if the VIX rallies and the S&P drops, there are many trading instruments that will allow you to make money on the way down. There's still a lot of people that are very confused. How can I make money in a market that's dropping or even crashing? Well, folks, I've been doing this for over 40 years, and you can definitely do that. Just take the time, learn it, come follow us, follow this YouTube channel, and I won't let you down, I promise. All right, speaking of promises, I told you I would talk about SLV. Now, if you're following me on X, understand that I put my silver trades out on X for the public. Today, I did sell out of 10% of my silver position, and that's because we had a bearish engulfing candle right there. My goal is to buy it all back on this gap fill and then parlay the position with the cash available that I've created through the sale that I've put through today. Now we're coming into the final seconds of the market right here. Understand that when I parlay the position, my goal is to sell little bits to buy more on the way down, and then over time I have a much bigger position and I parlay that, and if silver rallies, we're going to be off to the races, folks. Here we go. Markets are officially closed right now on this Friday, January 31st. Folks, if you got value from this video today, the only thing that I ask is that you click on that little like button down there, and maybe you click on the notification bell and subscribe. Next week, I believe we're going to cross over the 12,000 subscriber mark. We might even do that by tomorrow. That's a milestone for us, and I have all of you to thank for that, because when you like and share and even comment on this page, and I hope you will all do that, you're driving the algorithm to get us on the menu. So with those little gestures that you do with the click of a mouse, you're helping us grow this channel to get the word out and get the education to the people that are looking for it like you. Thank you so much. Have a great weekend. I'll talk to you on the next video. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.